Hi, this is Jeremy Kellett, Director of Recruiting here at Oakley Trucking, and I'm your host for this podcast. This is episode 47. You know, the saying continues to ring true, nothing can be said to be certain except death and taxes. Isn't that the truth? So despite the dread you might be feeling before the April tax filing deadline, it's got to be done. So on today's podcast, we are going to be joined by Jeff Amon and Michael Schneider with ATBS. Now, ATBS is a tax service exclusively for truck drivers. So we're going to dive into some really good questions for not only our owner-operators, but all owner-operators and truck drivers to learn a few things about taxes and what can benefit an owner-operator and truck driver. First, let's hear from Vickie Chastain on this week's Need to Know segment, sponsored by Lube Zone.
Did you know that Oakley owner-operators ran over 82 million miles in 2020? Another milestone in 2020 was Oakley had 9 owner-operators complete 1 million safe miles. Cliff Ely, William Barbie, Michael Neal Jr., Michael Kontz, Doug Harbour, William Fuller, Vic Beta, Deidre Wade, and Mike Johnson. That is a great accomplishment, and we are very proud of each and every one of them. I'm Vickie Chastain, and that's this week's Need to Know segment.
Do you dread getting an oil change because it takes too long? Then you haven't been going to Lube Zone. Their slogan is fast is back. Oil changes over the pit in about 30 minutes. Lube Zone has 11 locations throughout Texas, Oklahoma, Georgia, and California. Their goal is to provide good PM services as quick and efficient as possible so you can get back on the road. They're giving Oakley owner-operators a $40 discount on oil changes and a discount on APU servicing and trailers. That's until March 31st of 2021. Had one of our owner-operators call me the other day. He was at Lube Zone getting a service, and he said he would get back with me and let me know how they did. He called me back in a few minutes, said A+ for Lube Zone. Doing a good job. LubeZone.com. Tell them you heard it on the Oakley Podcast. So first, I want to talk a little bit about ATBS. Joined here with Jeff Amon and Michael Schneider with ATBS. And before we dive into these questions, guys, I'd really like to give our audience that may have never heard of ATBS, what exactly is ATBS? Jeff, you want to start since you own the place?
Sure. Yeah, I do. Myself and my 2 brothers own ATBS, and I won't get into a long background, but we've got diesel in our blood. We've been in trucking since we were 12 years old. We were diesel mechanics, and we've done just about everything you can do in the trucking industry, from mechanic work, driving, dock work, working in offices with billing and collecting and claims and OS&D and safety and dispatching and you name it. So, we grew up in the industry. We had a refrigerated truckload carrier. We ran about 600 trucks in 48 states in Canada, named TWX, and then we had an LTL operation that we ran about 150 trucks in, and we had a logistics business. And in 97 and 98, we sold those companies, and my brother Todd was our CFO in our trucking business. He literally started ATBS the week that we sold our last trucking company. And kind of the reason ATBS exists is because we've gone through a process to convert 100% of our company drivers to owner-operators. And people wondered why we did that, and then this was the deal with company drivers. The market sets freight rates. Individual carriers can't go out and charge more than anybody else because there's so much capacity out there. So if market's setting the rates and you want to make more money as the owner of a trucking company, you're making more money not by charging higher rates, you're making your money by reducing costs. And in trucking, your 2 biggest costs are labor and fuel at the time. And so for us, with labor as our single biggest cost, for us to make more money, it meant how do we get our people to work harder and how do we pay them less for the work they're doing? Because the better we are at making them work harder and paying them less, the more money we make. And so it's just this horrible win-lose culture, because for me to do better as an owner, all my people had to do worse. And we just hated running a business that way. And so we said, how are we going to change our culture? And for us, it was owner-operators, because with owner-operators, the company's basically getting a percentage of their take. And so the better your owner-operators perform, the more successful they are, the more successful you are as a trucking company. And so we converted 100% to owner-operators, and it completely changed the culture of our business. And we just, from that day forward, we loved owner-operators. And our whole focus was on how to make owner-operators more successful. And that's kind of the foundation of where ATBS came from. When we converted all of our company employees to independent contractors, they were great truck drivers. A lot of them had business background, but there just was not enough time in the day for them to manage the business and drive the truck. And so we searched the country for somebody to help our owner-operators with all, nobody became an owner-operator because they had this dream of being able to do their own bookkeeping and accounting and taxes, right? And that's the necessary evil that goes along with running your own business. And so we searched the country for somebody to help our owner-operators with that and coach them and make them more successful. And it didn't exist. So when we sold our trucking businesses, like I said, the first thing my brother Todd did was started ATBS. I had to run the acquiring business for a couple of years, and as soon as my employment contract was up, I joined Todd, and our brother Matt is here, and all three of us have been at ATBS for 20 plus years now. So that's kind of the background.
And I think that's when I hear you say that, and just like the podcast we did early on when you guys joined me, I can hear the passion, and you want guys to be successful, and that's the same with Oakley. We're the same way. We try to set owner-operators up to be successful because we need more of them. It's like there's not enough of them in the industry, and we try to make that. And I think that's why, I don't know, we've been friends for a long time, and that's why I love you guys' business that you have and the way you help truck drivers and especially independent contractors. So that's good stuff. So let's we've got a list of questions, that I know we talked about a little bit beforehand, and I really like these questions that we've got set up, and you guys answer. Y'all pick who you want to answer the question and explain it, but I love it being simple because, one, when it comes to taxes, I need things to be simple because I'm not real good when it comes to understanding that. But and I feel like a lot of truck drivers are the same way. I see that from a lot of them because we have a lot of them ask us who, we need some help doing our taxes. We need to know a place you guys can send us to, or we're confused about it, or we see guys get in it, Jeff, and they don't think they got to pay taxes, and then all of a sudden they get a bill, and now it's put them way behind. So that's a question for later on. But I think this first question we get started with is this PPP loan that's going on right now. And I just want to read this first question here verbatim so it makes it a lot simpler for our listeners to understand this. Last year, ATBS did a lot of work on PPP loans for our Oakley owner-operators. And now we're hearing about PPP2 in the news. So can you bring us up to speed on what's going on with this, the Paycheck Protection Program?
You bet, Jeremy. And maybe some I'll just clarify real quick. So as I mentioned, my two brothers and I own ATBS, and Michael Schneider runs our tax department here. So when you get into specific tax questions, I'm absolutely going to yield the chair to Michael because he knows this stuff inside out. And so with that PPP, great question because, it's been in the news now for a year and or nearly a year. PPP 1, which is PPP, the original PPP last year, was in place April through August. And as you mentioned, we worked with a lot of Oakley owner-operators. ATBS made a decision. It was kind of scary times for us, wondering what was going to happen with trucking, what was going to happen with owner-operators. And, we were talking about, should we lay people off? How do we cut costs to deal with, the pending gloom that's coming in transportation? And as we went through those talks, we said, what, this industry's been good to us our whole lives. We need to make sure we're always giving back. And so instead of laying people off, we took everybody we had and we became experts on PPP loans. And it cost us somewhere between $400 to $600 to do applications for clients for PPP loans. And we decided to eat 100% of that cost and do them for free for our clients. And, we're pretty proud to say that through that process, we helped our clients get over $15 million in PPP loans, which is pretty awesome. like I said, we're proud of it. We're excited about it. It saved a lot of our clients, and a lot of our clients are now thriving as a result of that. So, that was PPP last year. Like I said, it was April through August that PPP was in place last year. As you mentioned, everybody's talking about PPP again. And the reason they are is because now the federal government has come out with what they call PPP 2. And so I'll talk a little bit about PPP 2 and what's up with it. I was actually on a call yesterday with one of the top administrators at the SBA talking about PPP loans. So right now, there's two types of PPP loans. They're called PPP 1 or PPP first draw loan, and PPP 2, which is the PPP second draw. So if you've never had a PPP loan before, you can apply for the new PPP first draw loan. The requirements for that are that you had to be in business on February 15th of 2020, that you did not get a PPP loan last year, and you have to attest that your business was negatively impacted by COVID-19, and that's why you need this loan. Go ahead.
So let me just clarify that because I'm not sure. So the PPP, if they got one last year, can they get one this year?
Yep. So that's two different things. If they got one last year, they would file for PPP 2 this year.
Okay.
If they did not get one last year, it would be PPP 1. And so that's what I'm talking about right now is the PPP first draw, which is for people that did not get one last year. And then I'll wrap up with PPP 2 for the people that did get one last year.
I'm with you.
So for those that didn't get one, okay, good. The ones that did not get one last year, you'd apply for the PPP first draw loan. And again, we're doing them for free for anybody that's an ATBS client. We'll do all the work for free to help you get that loan. I talked about you had to be in business on February 15th of 2020 to apply for your first PPP 1 loan. And your business had to be negatively impacted by COVID-19. The calculation to determine the size of your loan is that you take your average monthly payroll and you multiply that by 2.5 times. So for an owner-operator, to determine your average monthly payroll, what we do is we take your Schedule C and we divide that by 12 for 12 months. And that gives us a monthly number. And then we multiply that monthly number by 2.5 times. So let's say your net income, your Schedule C income last year was $85,000. If we divide that by 12, that comes out to just over $7,000 monthly income. We multiply that by 2.5 times, and that means your PPP loan amount would be $17,700.
Quick question, Jeff.
So, yep.
When you say negatively impacted, basically, is that just comparing the year before to what you're doing in 20 and from 19 to 20 maybe? How do you have to prove negatively impacted to get the loan?
So that's a great question that I think a lot of people don't know the answer to. PPP 1, you just have to attest, and I'll read the actual statement. You have to attest to this in the application. It says, current economic uncertainty makes this loan request necessary to support the ongoing operations of this applicant. So you have to attest to that. So for PPP 1, that's all you have to do. It's different for PPP 2, and I'll explain that to you.
Okay.
But for PPP 1, you just have to attest that your business was negatively affected by COVID.
Okay. Thank you. Good question. Good answer.
Yep. So we've kind of talked about how the loan formula works to determine how much of a loan you can get. On the PPP loans last year, you had to choose a period of time that loan would be used for. You had to choose either the loan was for 8 weeks or 24 weeks. That was last year. This year they've changed that. You can pick any period of time between 8 weeks and 24 weeks to use that money. And what we suggest to all of our clients is that they use that money for payroll. It makes perfect sense, and it's forgivable if you use it for payroll.
Have you seen a lot of that forgiven?
Back to that. It's all been 100% of our clients that have applied so far have gotten forgiveness.
Bam,
and
that's awesome.
And it's because of the process we went through is why they're getting forgiveness. We set it up that way from the beginning to make sure they get forgiveness. And anybody that got a loan that used us to do their application, we're happy to do their forgiveness applications for free also, and we're doing them every day. I know we've done some for some of our Oakley clients, and 100% of them have gotten forgiveness of those loans.
Yeah, that's great.
And not only are they getting forgiveness, it's also not taxed. So it's literally free money. That money, you're allowed to deduct those expenses now also on your income tax return. So that money, it's forgiven. You don't have to pay it back, and it's not taxable income.
Do you think just a lot of truck drivers hadn't done it because they just don't know how to do it? Because, I would say our guys, our owner-operators, they all could do that. And I don't know why they don't, other than maybe they don't have the knowledge of, or being a little worried about doing anything with the government, and it being forgiven.
Sure.
That typically doesn't go together. Maybe that's their deal. But but now, this is a round 2, and you've seen success with round 1. Round 2's now time to try to do it again and help themselves get through some tough times.
I agree. I'd say if they did not do it last year, definitely call us and let's see if it makes sense this year. And like I said, if you're a client, we do this for free. It doesn't cost you anything for us to do the application for you. And then let me talk now about PPP 2, and that's for people that got a PPP loan last year. They can apply for another PPP loan this year. It's called PPP 2 or PPP second draw loan is how the SBA refers to it. The requirements for the second draw loan are, again, you had to be in business on February 15th of 2020. You had to have used 100% of that loan that you got last year. You had to have used all of it in the operation of your business before you can apply for the PPP 2 loan. You had to have used it by the time you make application for PPP 2. And then it's that same thing, current, you have to attest that current economic uncertainty makes the loan request necessary to support the ongoing operations of your business. But there is one added kicker to this. In PPP 2, there was a bunch of news last year of big, hugely successful companies that were getting PPP loans, and it made terrible press for the SBA and the government, and they hated that. And so the way they're avoiding that with PPP 2 is that you have to show that you take any quarter of 2020, and you have to show that your revenue in 2020 in any quarter was 25% less than your revenue in the same quarter in 2019. So again, simple calculation. If guys don't know how to make it, they can call us and we can do it for them, with them, figure it out. But if your revenue in any quarter, like especially the first quarter when everybody was getting hammered, if you had a quarter in 2020 where your revenue was 25% less than the same quarter in 2019, you can apply again for another PPP 2 loan. And then, when I was talking yesterday to this official from the SBA, the question asked of him was, you can't apply for the PPP 2 loan unless you can prove that, unless you had revenue that was 25% lower than the year prior. So doesn't that automatically say I was negatively impacted by COVID-19? And the reason I say that is something you hit on, Jeremy. A lot of guys are concerned that they're going to get audited and they're going to look to see if their business really was worse in 2020 compared to 2019. The SBA said, no, you're not going to get audited and we're not going to check, because the simple fact that you showed revenue 25% lower in 2020 than in the same quarter in 2019 is proof in and of itself that your business was negatively impacted. So you will not be audited to verify that. That was the SBA that confirmed that yesterday on a telephone call.
Okay, that's good. That's good. So simplify it. It's, to simplify it to me, and unless there's more you want to add, but if I'm a truck driver and never have gotten this, I'm thinking, okay, if I didn't get any money last year, I can still apply for the PPP 1. And
Correct.
Because evidently there's still some money there that can be given out. Great. And if I did it last year and I got money and I spent it right, got it forgiven, now I can do it again now with PPP 2 and go for another round. And I don't know why. Isn't that right, Jeff?
Yeah, it's exactly right.
That's to me is something that these owner operators sure need to take advantage of and help them get through a tough time. Okay, you ready to go on the next question?
Exactly right. Let me say one more quick thing about forgiveness, because we did do a lot of PPP loans for Oakley drivers, and so this may be a question. You were talking about forgiveness. So the rules with forgiveness is that you have to apply forgiveness 8 months past the term of your PPP loan. And so for 100% of the guys that we did PPP loan applications for, we did 24-week loans. Essentially, you take that 24 weeks, they've got that period, plus another 8 months to apply for forgiveness. So 14 months after they got their money, their PPP money, they've got 14 months to apply for forgiveness. So, none of them are in a panic mode. If they haven't applied, we can still apply. They've got till probably April, May, June, depending on when they got their money to apply for forgiveness. So, and it's really simple. A lot of them are just going direct to their bank because the bank's reaching out and they're just going to the direct bank and applying direct for forgiveness. But like I said, if anybody got any questions or needs help with it, just call us and we'll do it for you.
Okay, let's get into a little bit of some tax stuff that will be on a lot of guys' mind right now, I think. And so this next question is concerning owner-operators. Owner-operators often wonder why they owe so much in taxes. Can you talk about owner-operator taxes, especially for first-time owner-operators? Because that's what we deal with, a lot of first-time owner-operators at Oakley. A lot of guys buy their first truck. They're excited. They become an independent contractor, and they're loving it until the tax man comes around. And that would bring us to Mr. Michael. So give us a little bit of maybe a first-time owner-operator, Michael. What should they expect when it comes to tax time?
Yeah, it's absolutely a great question. Most owner-operators, first-time owner-operators, are there because they've been an employee before. So they're looking to make themselves a better life, become their own boss, run their own business, and it's a great pursuit, comes with tremendous benefits. But just as you outlined, it's going to come with some surprises too. So you got to keep learning, you got to keep plugging away at this, and we'll help you do that. So to outline that a little bit and keep it simple, when you're a W-2 employee, you think back to those times your employer takes care of your taxes. It's deducted from your paycheck. It's remitted to the government, wherever that may be, state or federal, and you're taken care of. So when you become an owner-operator, independent contractor, you've got to take care of those taxes yourself. So that includes taxes that you may be familiar with, but some you may not be. Income tax. Everybody knows you got to pay income tax. We opened with, death and taxes. They're not going anywhere. So you've got income tax on the mind, but there's other taxes owner-operators pay that they may be less familiar with. Social Security, Medicare. These are taxes that don't come front of mind, and that's where the surprise comes from. So that combined rate on your tax return is going to be 15.3%. So that automatically you got to prepare for that. Anything you make in net profit, you got to prepare for 15.3%. Then comes the income tax rate. Most owner operators are going to fall in the 10, 12, maybe the 22% tax bracket. So you add that to the 15%, and that's where ATBS comes up with best practice. Let's keep this real simple. 25% of your paycheck goes to a savings account right away for taxes. If you do that, you're not going to have surprises at the end of the year that you don't have any money saved up for taxes. So even better, ATBS will prepare that model for you every quarter, and this is due 4 times throughout the year. So you're an owner-operator, you got to pay taxes 4 times a year. That's going to be April 15th, June 15th, September 15th, and January 15th of the following year. They aren't straight quarters, so they're hard to remember. That's why I outline them here. It's not a traditional quarter. March 31st, we think is, okay, that's the end of the first quarter. IRS made these up. We're not sure why. They picked those dates, but those are the dates the taxes are due. So one of the services we provide is we'll calculate that for you. We'll use your net profit and figure out what your tax bill would be based on your circumstance, and we'll send you the number and say, hey, this is what you got to pay. Here's the form you got to use, and you fill that out and send it in, and you're good to go.
I got a question for you, Michael. So you're paying the taxes quarterly, and you're not even getting a bill? I mean, you're just giving it to the government without even getting a bill in? That's hard for people to do, Michael.
Absolutely. And that's where the second smaller surprise sometimes comes in is people think April 15th is tax day, and they're right. But that if you haven't been paying quarterly, you're going to be surprised with a little bit extra. IRS is just like any other company out here. They're going to charge you penalty and interest if you don't pay them on time. So it's a smaller surprise. It's not anything to panic about. It's usually a couple $100 a year if you didn't pay any quarterlies, but it's something to think about. It's a way to put more money in your pocket and save more money, is pay on time and be organized.
Hi. Jeremy, you mind if I jump in and say something about quarterly estimates? Michael, is very modest, but something I think, especially first-time owner-operators and especially your folks that don't use ATBS to do their tax work, when it comes to quarterly estimates, what the IRS and what everybody does, they call it safe harbor estimates. The IRS allows it, and every accountant out there, every CPA, every tax person does safe harbor estimates. And what safe harbor means is you take last year's tax bill, you divide that by 4, and that's what your quarterly estimates are. And then when it gets to April, you look at how much you paid in estimates versus what you really owe, and that's when you make up the difference. And we believe that's the kiss of death for owner-operators, because almost never is this year, I'll say never, is this year the same as last year. So if you're paying your estimates based on what your business did last year, that means when you get to April, you've got to make up the difference. And, April is the worst possible time to ask me or you or any owner-operator for money for the IRS, because, we all overextend during the holidays, and then the first quarter is notoriously a slower quarter for trucking. And so if we spend too much during the holidays and we're not making as much during the first quarter, we find out we owe several $1,000s in taxes in April, that's the beginning of the end for most owner-operators. And so even though safe harbor is what everybody does, I would suggest, like I said, if you're not using ATBS, this is what ATBS does, and make your accountant do this if you're not using ATBS. Because for our clients, we're doing their books and their P&Ls every single month, and we look at what their business is doing and their spouse income or rental properties, farm, whatever they're doing. Because we know what their business is doing every quarter, the IRS allows you to either pay these safe harbors, or they allow you to pay based on what your business actually did in the quarter. And so we do our estimates based on what your business did that particular quarter. And the reason I think that is so critical, and why anybody that's not using us, you need to force your accountants and your CPAs to do the exact same thing. This is why it's so important. If you had a slow first quarter, you're not going to owe anything in estimates because you had a slow first quarter. If you had a great second quarter, you're going to owe a lot in estimates, but it's okay because you had a great quarter and you've got the money to pay a lot in estimates. So our method of doing your estimates based on what your business did each quarter, we're matching your cash flow to what you owe in estimates. It's not like you had a terrible quarter, but you have to pay 1/4 of the taxes you paid last year in this terrible quarter, and oh my God, I don't have the money to pay it. Like I said, we don't do it that way. We base your estimates on what your business did each quarter, so your cash flow matches what you owe.
Yeah, that makes sense too. And I think, Michael simplified it to me. You need to save 25% of your net income every week. It needs to go into a separate account for taxes. Right, Michael?
That's exactly right, yep.
That'll save you some headaches down the road. What about, I don't know if we want to get too much into this, but the next question was depreciation. Does that factor into that? The 25% of net income should never change, right? But how does depreciation change that?
Correct, yep. So depreciation is a big topic, especially for new owner-operators. And I'm leaning towards owner-operators because for depreciation to matter in your overall view of tax is you have to purchase the equipment or be purchasing the equipment. So I think of lease-to-buy options, capital leases, these types of things where you're going to end up with the title eventually. If that's the case in your agreement, then you're purchasing your vehicle, your equipment, whether it's tractor or trailer, then depreciation applies to you. So a lot of accountants out there, they like to complicate depreciation because it makes them feel smart or makes them feel like they have something over you. We're not trying to do that, or I'm not trying to do that. So people ask me this all the time, and they say, how do you do your job? I definitely couldn't do your job all day, sit at a desk and do taxes for 8 hours a day. And I tell them right back, well, you put me in a truck, I wouldn't be able to put it into gear.
Yeah.
So we've got our strengths and differences. But I can hopefully simplify this for folks. Depreciation is over a period of time deduction on your tax return. And the deduction is always equal to the cost of the equipment. So if you spend $100,000 on a truck, you're eventually going to get a $100,000 deduction. That's going to be over time. So IRS puts rules on these things. Tractors are 3 years, trailers are 5 years. You go write your congressman if you wonder why. Nobody knows why they chose those years, but that's what they're using. So then another thing I like to do to try to simplify things is use analogies. So you think of a car you may have purchased, a personal vehicle. They tell you as soon as you drive that car off the lot, it loses value. So what depreciation does is it tries to match your tax deduction with the current value of that piece of equipment. So trucks depreciate in value quickly. They go down in value over time, so you're going to recognize that deduction greater in the early years and less in the later years. So for example, a truck, in the first 2 years, you're going to recognize 77% of that value. So I'll use the 100,000, keep our math easy. $100,000 truck in the first 2 years is going to give you a $77,000 deduction. The last couple of years is you're not going to get hardly anything. So that's what they use an accelerated model to give you more of a benefit up front when you buy a new piece of equipment. The only thing I'll add to that, and unfortunately this does make it a little more complicated, is there's two options that Congress introduced a while back, and they've been playing with these to try to stimulate the economy. It's Section 179 depreciation and bonus depreciation. Right now they're both at 100% of the cost of the asset. So we'll just keep using the $100,000 truck as an example. Section 179, you can go in and say the first year you bought that truck, you can take a $100,000 deduction if you want to. Not always the best idea, but it could be. Bonus, same thing. Right now it's at 100% deduction. If you want to go in and do that, the decision has to be made in the first year you buy the equipment. So that's the critical year you want to be talking with your accountant and understanding, is this a smart idea? If you're a new owner operator, you're buying a truck, you've got some big decisions to make in that first year. Do you want to use 100% or not? Section 179 can be played with a little bit. You can choose your dollar amount. So that's something that's helpful for folks that may not be in maybe they didn't earn $100,000 their first year. You can play with Section 179, use 10,000, use 20,000, whatever you want to use. So that's something we do at ATBS is find that sweet spot for clients and get them into that position where you want to pay a little bit of tax, you want to have some net income, but it won't be a huge burden in your first year of business.
So the depreciation, you want to, when you say take $77,000 over the first 2 years you said?
Yep, first 2 years.
So an amount of depreciation comes off what your gross pay was, or does it? I mean, how does it equal dollars to the owner operator?
Yeah, the deduction is just like if you were to go buy fuel or put in oil in your truck. It's the same exact calculation as a deduction. So if you made, I try not to use these examples, but we'll say you earned $200,000 gross. That's what your 1099 says. You took a $100,000 deduction. You've got $100,000 that you're going to pay tax on.
I got you.
So that's what's left over.
Yeah. So
I think one important takeaway from what Michael said is that, and again, something to talk. Anybody that's not using ATBS, this is critical to talk to your CPA about. Most CPAs are one size fits all, and every driver that comes to them, they're going to do the exact same depreciation formula. As Michael mentioned, each client that comes to us, Michael's team talks to them about all the different ways we can do depreciation. And, a lot of guys, that accountant will take all that depreciation up front, and the guy just getting absolutely hammered on taxes the last 2 or 3 years and can't run his business. So we talk up front about how long they're going to be in the truck, what they're doing, what their revenue and net income is going to look like, and we customize a depreciation schedule that takes advantage of that tax deduction over a period of time that's best for that driver, that client of ours, and their business. So like I said, don't let your CPA tell you this is the way to do it, this is the only way to do it, and this is how we're going to do it because this is how we do it for everybody else. Have that conversation and design your depreciation however is best for you and your business.
That makes sense because I got a lot of guys that they're trading every 3 years regardless. So I bet a lot of it's got to do with that depreciation, and it's being consistent with them just buying a new truck every 3 years and keep going. So I know it does. That's good. Okay, what about some of the deductions? This next question is, owner-operators are often concerned that being too aggressive on certain deductions will trigger an IRS audit. What's your thoughts on taking strong positions on deductions? I guess that means, them getting too aggressive on certain deductions. They don't want to throw a red flag up and say, hey, come check me out. Nobody wants to do that, whether they're doing things right or not.
Jeremy, we regularly have clients come to us and say, I don't want to take that deduction because I don't want an IRS audit for taking it. And so I'll let Michael share exactly what his approach
chances,
is.
Yeah.
Yep. It's definitely a common question, and it's sad to see it when it happens because they're your deductions. You need to take them on your tax return and reduce your tax liability. There's no sense in leaving deductions on the table. For example, having a loss on your business, you're not going to pay any taxes if you have a loss on your business and you don't have any other income. And that's a position that you should take advantage of if that's the case. You had a tough year. So really, I try to paint the IRS not in a terrible light, but they're there to enforce and collect. And yes, there could be a random audit and you could get selected, but they're not looking for small dogs and small dollar amounts. If they're going to put a field agent out there to come check out your books, they're looking for big money. And you should just represent your tax return as accurately as it happened throughout the year. So it's ordinary and necessary for you to run your business and spend that money, then you should be on your tax return. That's our position. It's much easier for us to explain a deduction that exists than to explain why something's missing. So that's somewhat of a factor. Where this comes from sometimes too, just to outline, is people trying to qualify for a loan. So this will come in when, trying to get a mortgage. So you're trying to show more income than is ordinary. And some tax preparers would go in and say, sure, I'll take those deductions off your tax return. But that's really a win-lose in my book. You're going to win with the mortgage and you're going to lose with the IRS. Why not do a win-win? And this comes in with per diem specifically. I'm happy to explain and write a letter to that mortgage company to explain to them what per diem is. You take the tax deduction, reduce your tax bill to as low as possible, and I'll help you explain what per diem is to your mortgage company so that you can still get that loan. I think that's a much better approach than to leave deductions off your tax return.
Yeah, very good. Okay, we're here with ATBS talking to Jeff Amon and Michael Schneider, giving you some good tax tips for owner-operators, truck drivers, especially Oakley owner-operators out there. Hope you guys are listening, but let's take a quick break here and let's hear from one of our sponsors, Aero Truck Sales. So Aero Truck Sales, new sponsor of the Oakley Podcast. Be sure and give these guys a call and talk to them about what trucks they have. They've got a lot of trucks that are 5-year newer, all makes and models, less than 400,000 miles on them. They specialize in first-time truck buyers. Good people that we've worked with for years. The best part probably I was working with these guys at Aero Truck Sales out of Springfield, Missouri, is the service after the sale. They take care of you after you buy the truck. Love dealing with Keith Wilson at Aero Truck Sales out of Springfield, Missouri. They're running a promo right now. You buy a truck from Aero Truck Sales, Springfield, Missouri, you get a $250 fuel card and a CB radio. You mentioned that you heard it on the Oakley Podcast. Give them a call, Aero Truck Sales, 573-216-6047. Okay, guys, let's go to the next question. Y'all doing okay? Everybody, y'all good? Keep going?
We're great, man.
Okay.
We're great.
Doing good.
What time is it out there in Denver? Y'all hour behind us?
Yeah, 2:15ish.
Okay, cool.
We go as late as you want. It doesn't matter to us.
I like it. Oh, no, we're good. We're in good shape. I think these are really good. I mean, this is just good stuff that all owner-operators need to understand, and they need to take the time to invest in a good company, whether it's ATBS or, like you said earlier, Jeff, their tax accountant, and I think, a lot of times we try to cut corners getting a tax guy, either getting our family friend or somebody we know, or this guy referred somebody, and of course, the older I get, I go, well, that's not very smart. I need somebody that knows all the rules, all the deductions, everything that I can do to maximize my money, because it's my money, and I want to make sure that I'm getting all of it I can and not giving it away just because somebody's not on top of the rules and don't know all the changes that's happening every year that you guys got to keep up with. And my old brother-in-law, or they're not going to may know all those because they only do one truck driver, 5 truck drivers, and you're the only one. So I'm not saying they just don't know the trucking laws and rules like you guys do. So I think that means a whole lot. That's where I'd want to be anyway. So on this next question, we're obviously in the heat of tax season now. Are there any new deductions or anything you can tell us about the 2020 taxes? You want to take that, Mike?
Yeah, there's a handful of them, and so we'll try to go through them one at a time. Some are controllable and some aren't, but hey, they all benefit you, so we'll take a jab at each one. So the first one I want to talk about is qualified business income deduction. So this is QBID sometimes, or QBI is what you'll hear out there. And for new owner operators, they might wonder, well, what's that doing? If we remember back to the Tax Cuts and Jobs Act, it was introduced as a 20% deduction for self-employed individuals. This came because they were reducing the corporate tax rate. They wanted to give something out to the littler guys that, hey, I don't have a corporation, but I've got a LLC or a sole proprietorship, and they gave out this 20% deduction called qualified business income deduction. So they are qualified for that. That should be on their tax return. They need to make sure that their accountant knows about that they qualify for that deduction. And that's pretty easy to get. You $100,000 net income, you get a 20% to $20,000 deduction for nothing else than filing your return. Man. So that's an important one. Again, I don't say you have a lot of control over it, but as a taxpayer, you want to make sure that's on your tax return, that's a benefit for you. Another one I want to talk about is the family credit for sick leave. This is primarily due to the COVID pandemic, and what they've introduced here is a credit which is different than a deduction. So I want to make that distinction. We talked about deductions. Those reduce your tax liability, but credits are dollar for dollar reductions of your tax liability. This happens to be a refundable credit, which means if you don't owe any taxes, you paid your estimates, you did what you were supposed to do, then the IRS is going to cut you a check. They're going to actually refund you the difference. So first it'll satisfy your tax debt, and if you don't have tax debt, they'll cut you a check and refund it to you. So this first credit that I'm going to talk about is a refundable tax credit. And what it does is if you missed work because you were under an isolation order or contracted COVID or somebody in your family did, you can get paid for up to 10 days of this time that you missed work. The calculation is a maximum of $511 per day. So quick math, 5,110 is the most you can get, but most people will get less than that. The reason for that is it's going to be a calculation of 2/3 net income. So just like the PPP, they're going to take what you earn, they're going to use a calculation to determine how much do you make every day on average, and that's what they're going to pay you 2/3 of that amount. So it's a great way to dip back into that pandemic and pull some benefits out of that, some silver lining out of that. On top of that, sorry, any questions on that piece?
That's worth the whole show right there, Michael. I mean, you telling me? I mean, the QBI deduction can be $20,000 if you made $100,000. That's great news. And then this, we've had a lot of people off for COVID that had gotten it, or their family had got somebody in their family that had to take off and take care of them, and 2/3 of their net income for up to 10 days. I'm gonna say none of them know about that. So that's great.
It's a fantastic one, and they put a little cherry on top of this one, which was a little surprising to me, but hey, it's out there, so take advantage. The second piece of this sick leave is for your family. So say you have a child in school and there's an isolation order, that student had to learn remotely. Well, you weren't prepared for that. You didn't have a babysitter or a nanny to take care of that kid, so you had to take off work to watch your kid go to school, or if they're younger and their child care facility was closed, their daycare was closed due to COVID, you can get money for that too. You can get an additional credit for that. That is up to 50 days, so a longer period of time, but the maximum is 200. So that's an up to $10,000 credit. Again, a refundable credit. If you did what you were supposed to do, and this applies to you, you get a $10,000 check at the end of the year for no other reason than the pandemic. So make sure it's reported on your tax return accurately. You want to make sure you qualify for that.
Good information.
I've got a couple other 2020 items. If we want to go through those are the two biggest.
Yeah, that'd be fun.
Yeah, go through them, man.
Okay. So we've got obviously the stimulus checks. The only thing I'll talk on there is they're tax-free. So a lot of people asking me, well, am I going to have to add this to my tax return? Yeah, technically we need to do a side calculation, but that calculation is to make sure you received what you were supposed to. If you received less than you were supposed to, we want to capture that and get you your credit. Again, that's a refundable credit. So we do need to know what you received, but that's not taxable income. That's free money to you. So don't worry about that being taxable. We talked about the PPP. If we mentioned it already, I apologize, but they were arguing back and forth, IRS and Congress, and luckily most of the country didn't have to follow that. But the IRS was arguing that if your loan got forgiven, then the items you spent were not deductible. Items you purchased with the PPP loan was not deductible on your tax return. Congress finally came out December 27th and said, that's bogus. We intended for this to be tax-free money. So if you bought, paid payroll, bought fuel, maintenance, all of those expenses are deductible. So you don't have to worry about that. That's big news. Charity deductions are brand new. So they changed the rule again, going back to Tax Cuts and Jobs Act. They inflated the standard deduction. Single went from doubled roughly to about $12,000, and married doubled roughly to about $24,000. So it's $12,400 this year. $24,800 for married couples, and you were not allowed to take charity deductions because you weren't itemizing. You weren't itemizing your deductions like medical, charity, home mortgage interest, things like that. So you were just taking the flat $24,800, which is great. But this year they introduced, even if you take the standard deduction, you can take a $300 charity deduction on your tax return. So don't leave those charity receipts in hiding. Pull them out, get them to your tax preparer. It goes up to $600 next year if you're married, so $300 per individual. The last one that I had was the waiver of the 10% penalty on early withdrawal of retirement. So if you withdrew retirement funds, IRA, 401k, things like that, as a result of COVID, you are not going to pay the 10% early withdrawal penalty. So those who are familiar with that, if you're under age 59 and a half, you have to pay an extra 10% on that withdrawal. That's gone if it was due to COVID. Huh. So make sure if you took a withdrawal from retirement, you're talking to your preparer, you're telling them this was because of COVID, I took this money out.
That's good to know.
Some good stuff, huh, man?
Hopefully nobody had to do that, but I'm sure some of them did somewhere, and that's good to know. That is really good stuff right there. I was sitting here as you were going through most of those. I was looking at the next question. I mean, it's about all those covered, isn't that right? I mean, this is the next question talks about tax deductions that they didn't know about, and if they missed those deductions and paid too much in taxes. Can you tell us what kinds of deductions owner-operators often miss, and also share any thoughts on how to minimize the taxes owed? So I know you covered a little bit of that, but there may be some more there.
Sure. So this I address because the people will say, is there anything in my day-to-day that I'm missing? I'm not talking about tax law changes. What do I buy out on the road that's deductible that I'm forgetting about? And I get that question all the time. So it's really devil comes down in the details here. And the definition I want to give everybody out there is the IRS's definition of a business deduction. Ordinary and necessary. Those are the only two things you have to meet to make it a business deduction. So we're talking things, security dogs. It's a security system. You got to protect your belongings in that truck. That's an ordinary necessary deduction. Sunglasses, truck-related smartphone apps. You're downloading load boards or weather apps. Those are deductible. If you've got internet in your truck, that's deductible. Safety items, even down to the little things, ice scrapers and fire extinguishers. If it meets that ordinary and necessary, it's deductible.
I think those are great examples. I mean, what I would say is a lot of this illustrates why, there's a lot of qualified tax preparers out there, but what you can deduct as an owner-operator is very specific, and we get new clients all the time that will give us the number's kind of staggering, but we bring in anywhere from 800 to 1,000 new clients we get every month, and a lot of those were using somebody else before they switched to us, and so we see a lot of tax returns that other folks prepared, and like I said, they can be CPAs that are very qualified, but they just don't know trucking, and there's very specific deductions for trucking. And how many accountants out there are taking a tax deduction for sunglasses as a safety device in the truck, right? I mean, there's a lot of that type of stuff. And so I would just say, Michael's department, they spend all day, every day, arguing with the IRS about what deductions we think our clients should be able to take because they're important to their business. And just like the sunglass example I gave, the guard dog example that Michael gave, people used to think you had to have a German Shepherd or a Doberman Pinscher or a Rottweiler or something in the truck to consider it a guard dog. But you can have a dang Chihuahua. If it barks when somebody's at the door, that's an alarm mechanism, and you can take a security dog deduction for that, and that means you can write off the vet bills and the food that you buy for it and all of those things. So, like I said, it's Mike. When we do taxes, there's a little bit of an arrogant statement, but we think our clients are the most sophisticated owner-operators in trucking because, we spend all of our time managing their back office and helping them be successful, coaching them on how to make more money. And I can tell you when we do taxes every year for our clients who we think are ultra sophisticated, 92% of our clients every year, we find deductions that they forgot to give us. And I'll just describe it this way. When Michael's department is doing tax returns, because we're doing tens of thousands of drivers as clients, we're doing their taxes, we identify every line item on that tax return. We know that client, where they're driving, what they're doing, and what kind of expenses they should be incurring. They've got kids in school or all the things Michael just described for COVID or anything else. We know what their expenses should be. And if we're missing something in an area or we don't think we have enough in an area, we know in fuel, this is where you should be based on the truck you're driving and where you're working. We know maintenance, this is where you should be based on, the truck you're driving, what kind of work you're doing. And we set up a statistical analysis of everything on that client's tax return. And we identify if something might be missing, right? You go to any other H&R Block or Liberty or whoever you might go to, Jackson Hewitt or somebody's relative to get a tax return done. You hand them your stuff and they give you a tax return. We don't do it that way. We take everything that we've gotten from you And then we look for what you forgot to give us. And we go back and say, you know what, we think you're missing some maintenance from July of last year. Let's find it so we can write it off. We just, like I said, it could be kids in school. It could be the COVID stuff. We look for anything that might be missing, and we tell them to get it so we can take an additional deduction. And like I said, for 92% of our clients, we find additional stuff that they forgot to give us so we can take bigger deductions and reduce their tax bill.
So let's talk about that real quick, Jeff. Just a little more detail of what you guys offer as a company, because I know as soon as you're saying that stuff, I know our guys that are signed up with you, you actually have a person that they can call and talk to, and you guys, even you call them and go, hey, we need so-and-so receipts, or we need this now, and we don't have that. And as a company's working together, we actually send a copy of their settlement to you guys every week so you can keep up with. But explain a little bit of how that would work. If I'm a truck driver and I want to sign up with ATBS, what happens there?
That's a great question, and let me preface it by saying we can do anything that the client needs us to do anywhere. We've got drivers that have a spouse in the truck that wants to do all their books for them. They just want us to do taxes, so we'll do taxes only. We've got clients who we've got guys anywhere from first-time owner operators to guys that have 20 trucks. If you got multiple trucks, we can do entity formations. We can make you an LLC or a S corp. We can do your payroll. We'll file your payroll taxes. We'll keep you current with Secretary of State with your business. We can do balance sheets. So anything somebody needs, we can do. I think the easy way to understand our most common package, we call it professional, and that's what 90% of our clients buy from us. It's exactly what you described, Jeremy. The first thing that happens when they become a client is they get a personal business consultant that's theirs from cradle to grave. And the reason we think that's so important, it's like I said, we grew up in trucking, and it's kind of the fleet manager concept, right? We've got over 100 employees, we've got tens of thousands of clients, but we don't want anybody to ever feel like a number here. So it's our intent to make sure everybody has a very personal relationship with a business consultant at ATBS, and that business consultant's sole purpose for being is to help our clients be successful. And that's everything from doing their bookkeeping. We've got, so as you mentioned, and this is a huge benefit from Oakley, every week you're sending us the settlement statement for any one of your owner-operators that happens to be a client of ATBS. And for your owner-operators or clients, that's huge, because that means anything on that settlement statement, they don't have to worry about dealing with that paper and sending it to us or some other bookkeeper. You're sending it to us automatically and relieving that burden from the owner-operator. So at that point, your owner-operators, the only thing they need to send us is something that isn't on the settlement statement. And then for that stuff that isn't on the settlement statement, we have an app, an ATBS app, that we've written. It costs us a frickin' fortune to write it, but it's an awesome app. And they literally, they can take our app and take pictures of whatever they need to send us, and it automatically codes that, sends it into our system, so that they don't have to worry about sending us hard copies of stuff. If they want to mail us, well, we'll give them mailing envelopes if they want to mail us stuff. But most of our clients now are using our app and just taking pictures off their phones and sending us stuff that way. And so they send us all their stuff every month, and then every month we create a profit and loss statement for them that shows exactly how their business performed. And the really awesome thing about that profit and loss statement is, again, because we're dealing with thousands of owner-operators, we benchmark them and show them on that P&L exactly where they're doing good and exactly where other owner-operators are performing better than them. And so an owner-operator, one of our clients, if they want to get in the weeds and understand all the details of that P&L, that's fine, that profit and loss statement, they can do that. But our P&L can be as simple as they literally look at the P&L, and like I said, it shows them this is where you're doing good, this is where you need to make changes. They can open it up and say, this says I need to make a change in what I'm doing with fuel. Or here's a great example. Your guys come to you with trucks that they've gotten from an outside source, and probably the F&I guy at a dealership or somewhere sold them physical damage insurance. And that physical damage insurance was based on the day that they bought that truck and what that truck was worth. And a lot of times they forget to go out and get that truck appraised every 6 months and adjust down their physical damage insurance because the truck depreciates in value. It's not worth as much. Well, with our benchmarking, it'll identify if this guy's paying too much in physical damage insurance versus what we think he should be paying. We reach out to him and say, hey, man, let's get an appraisal and get you some better rates on your physical damage insurance. And so, I mean, that's every category in his P&L. We look at how can we help them make more money running their business. And it keeps them at best practices all the time. I love to tell our clients, you can go to a big carrier that has company trucks, that has 1,000, 2,000, 10,000 company drivers. And if they want to make a change in their business, like maybe they want to slow down 5 or 10 miles an hour to get better fuel economy, if they want to make that change, it's going to take them 6 months to slow their trucks down. An owner-operator who's getting bad at fuel economy and might need to slow down because we're seeing fuel start to skyrocket again in terms of price, an owner-operator can look at that P&L this morning and decide he wants to slow down, and he slowed down this afternoon, not 6 months from now, and he's seeing immediate benefit from the changes he makes in his business. So, I mean, we just love it. And then, of course, we do their quarterly tax estimates like we talked about, and we do their year-end state and federal tax returns. And, I'm going to say one other thing, because we were talking earlier about how a lot of times drivers are afraid to take a deduction because they're afraid it might trigger an audit for a specific kind of deduction. One thing I think is really important, if you're not using ATBS, well, first let me say, if you're using ATBS, every return that leaves our office is reviewed and signed. Every tax return is reviewed and signed by one of our CPAs or enrolled agents. And what that means is if you're ever audited, we provide full audit support and we represent you in front of the IRS. You don't have to represent yourself. If somebody else is doing your taxes and they're not a CPA or enrolled agent, they can't represent you in front of the IRS. So if you're at an H&R Block or somewhere, or using somebody's spouse or a friend or somebody to do your taxes, if you get audited, you're representing yourself in front of the IRS, which is a pretty daunting task. So we provide full audit support and we can represent you because, and so the watch out there, like I said, if you're not using ATBS, make sure whoever you're using is a CPA or enrolled agent in case you end up in an audit. You don't want to be representing yourself in that audit.
No, I think that is very true. That especially y'all even do that, but that's ATBS. One of the best things that I like about you guys and what you provide for truck driver, especially an owner operator, is the comparison to other truck drivers or other companies in that division, because it's always been known, and it still is happens all the time, as these guys leave a company that they're making money with, chasing that dollar to go somewhere else, because trucking can be, great one month and back down to normal the next, and the guys get caught up into that and chasing that. And if I'm sitting there and I'm one of these guys and every month I get a printout, a P&L, and I can compare myself to what other truck drivers are doing at different companies, it gives me that, where I'm at in that, man, to me, that's just reassurance that I'm at the right place, and I'm doing good. You've seen, we talked a little bit about how Oakley guys compare, and I've always tried to get down to the net money, because a lot of guys want to brag about the gross money. Well, to me, it's in the net. That's where the money's at, and we see it all the time. We lease guys on. They think they're making money, but they get 50% of their gross. Every week they gross $5,000. They only bring home $2,500. Well, we always brag about it at Oakley. Is here you're going to get 65 to 70% of your gross. Now, to me, that's that's smart trucking right there, if you're able to do that. So I like the comparison thing you guys do.
So I'll reiterate, because I agree that's smart trucking, right? I mean, miles equate to work, and the more miles you got to run to generate your revenue, that just means the harder you had to work to generate that revenue. And I agree with you. It's not about how much revenue you generate; it's what you take home. And I tell guys a lot of times, let's say they're running on you just described at Oakley, and you're exactly right, a 60% plus profit margin on every dollar they generate. Well, I tell guys all the time, if you generate one more dollar of revenue, that means you're going to put 40 to 45 cents in, maybe 60 cents in your pocket if you generate a dollar of revenue. But if you cut $1 of cost, you're going to put 100% of that dollar in your pocket. So you want to maximize revenue, but it's real important to also make sure you're minimizing your costs. And when you talk about performance of Oakley owner-operators, Jeremy, we literally, I think we've got owner-operators. We've got 2,000 or 3,000 owner-operators are on their own authority. We've got guys that are small carriers, and we've got guys just about every fleet in the country that are clients of ours. And I can tell you, it's against the law for me to get in specific numbers for what's going on. It's antitrust if I tell you what's going on at other carriers, but I won't hesitate to tell you that I love our Oakley clients. They absolutely kick butt. Our Oakley clients are some of the single highest performing owner-operators in the entire trucking industry. It's unbelievable. And in the fourth quarter, I mean, our Oakley guys were annualizing over $100,000 a year in net income. And that's when the rest of the industry is doing less than 70. So, I mean, that is a big number. And that's why we love working with our own Oakley clients. It's awesome. And if anybody that's not seeing Jeremy live, he's doing a fist pump right now, and it's well deserved. and one thing I'll offer, we're right in the process right now of verifying what took place in all of 2020. We're the biggest database in the world on how owner operators are performing in transportation, and we do 2 reports a year, one every 6 months, and so we're neck deep in the data right now, finalizing numbers for last year on how the industry performed and how owner operators performed in general at every carrier and in every segment of the industry. We'll have that data done in 3 or 4 weeks, and I'd be happy to come back on for another podcast and share that data with your owner operators. It'll be neat stuff.
Yeah, good stuff. I would appreciate that too, because I like getting that good information that Oakley owner operators are doing good. We want them to do good, and well, we appreciate you guys hanging out with us. What's the best way? I know I went on your website and look at it once in a while, and it looked like you had some good information on these e-books. They can download some e-books. Does that help them? Is that free?
We've got some great ebooks. If you go to our website, which is simple, it's just www.atbs.com, and there's a button on that website that's called Knowledge Hub. And if you click on Knowledge Hub with just about any question you have in trucking and enter that in search, you're going to get more resources to answer those questions than you've ever seen. And I've had CEOs of multi-billion-dollar companies call me with a question, and I personally will jump on our Knowledge Hub and get the answer to that question, and I'll tell them about it. And I mean, they're in it all the time. And you'll find the ebooks in there, specific stuff about a lot of what Michael talked about. How did taxes change? What's going on with stimulus, PPP specific stuff, how to minimize my taxes, all the way down to how to get better fuel economy, how to do preventive maintenance on my truck, anything you can think of trucking related, I think you can find on our Knowledge Hub. So I would encourage anybody to go to atbs.com, including executives inside companies, dispatchers, fleet managers, customer service people, anybody involved in trucking. If you got a question, go to Knowledge Hub, click on it, ask your question, and you'll probably get some really good information about it.
Well, man, I sure appreciate you guys doing this. This is some fantastic information for truck drivers in general, to be able to go to ATBS and find out this stuff. And y'all just giving us good info. I mean, I learned a lot during this podcast, so I appreciate y'all doing it. Michael, thanks for all your input too, man.
Of course, yeah.
Jeff, appreciate you as always, man. I appreciate you staying in touch with us here at Oakley, and me too. And we'll definitely, when those year-end numbers come out, we're going to be back on the phone with each other. So thank you for doing it. I appreciate our sponsors, Aero Truck Sales and Lube Zone. Thank you guys for sponsoring the podcast, the Oakley Podcast. If you want to hear more about the Oakley Podcast, we got a lot of good episodes that we've done. This is episode 47, but we've got some good ones. Y'all need to go back and listen to some. Actually, some of the ones in the very beginning, we had ATBS on, one of the first ones to help us get it started and get it off the ground. So appreciate y'all for that. But be sure and check us out. Leave us comments down there on YouTube. We're on YouTube now, so that's been a whole nother journey there to get into YouTube. That's been fun. But leave us comments down there, and we'll answer them and try to get back with everybody. And if you interested in Oakley Trucking, check us out. Give us a call at the office. We'll talk to you about coming over as an owner-operator. Appreciate y'all listening, and we'll talk to you next week.